I want to talk about today's number, but I don't want to make that the whole topic today. What did you think of today's 4.1% first look at second quarter GDP?
We expected a strong number. This is a very strong number, but I think the more important thing is where the growth came from. This isn't growth that came from the revisions. There was no drama in the revisions except the saving rate. This isn't growth that came from one-time factors like inventories or the net export that everyone talked about. This was household spending, business spending, good, solid core growth.
You know, and I find that the case as well. One of the negatives that I see a threat of is that there was so much pull forward by tax reform that may skew growth in the short run. I understand corporations have some issues that they were able to maximize at a one time. But when those are done, they still have a significantly lower corporate tax rate. Individual/personal income taxes don't really have any big one-timers. Isn't a tax cut the gift that keeps on giving? Won't these tax rates, unless the other side of the aisle takes them away, keep more money in business and individuals' pockets, not only for this year, but for the year after that and the year after that?
Yeah, the tax rates will do that, and the individual side, I think we're showing up quickly. I would expect to actually get bigger impacts out of the business side going forward. You know, it's only been 7 months. Big corporations who are planning their CapEx haven't really been able to change as a result of the big business tax reforms. I expect the real impact of that to show up later in this year and early next year, and so I think there's a lot more to come out of the tax reform.
You know, and one of the other things we hear, and traders always have the great answers, man, we're getting long in the tooth on this business expansion, and traders always say, you know, good bull markets don't end because of old age. I would take it a step farther. You know, we've had a couple of administrations where they really have had a boot on the neck of business. I don't even know if you could start the clock ticking at those times. Am I looking at this wrong?
I don't think so. I mean, look. This is dramatically better performance. You know, for the past 5 quarters, the economy's averaged a hair under 3%. That is such a big improvement over 2.2, and there's a lot more to come. So expansions typically end because of policy errors. You're not going to see a policy error out of the tax and regulatory side. You keep an eye on the Fed, make sure there are no mistakes there, but I don't see any real reason to be pessimistic about the outlook.
Now, one final area I would like to discuss, and that's the notion of productivity. There was just a study released this week by the Brookings Institute that says past productivity might have been overestimated. Productivity is a tough one. We don't have much time left. It's hard to come up with concrete ways and a concise time frame to say we're going to work on raising productivity.
The one thing we know works is capital deepening, more and better capital per worker. That's exactly what the regulatory and tax reforms were aimed at, and so it's going to take time for that to pay off, but I'd keep your eye on that.